What's going on, guys? I'm Gilberto from Credit Guys, the show where we talk all things credit and finance related. In today's episode, we're going to be talking about credit cards. How many should you have? How many is too many? Is there such thing as applying for too many credit cards? Let's get into it. So, today's video topic, credit cards. How to apply for them, is having too many a disadvantage, the ins and outs, and what are the benefits. Basically, if you've never had a credit card before, you want to start off small. So let's say your score is anywhere from a 630 plus and you don't have any negative items. The first two things I would do is I would try to apply for a secured credit card. A secured credit card is basically a card that your personal bank, so be it Chase Bank, USAA, Bank of America, right? You go into any of your personal banks and you say, I want to apply for a secured credit card. What they'll do is they'll give you a secured card that you have to pay up front. Let's say you pay $300 and they're going to extend that line of credit to you that you've already secured. After about 6 months utilizing that card, they will then turn it into a real credit card with real credit on it. So that's a really easy, quick way to add a primary account and add positive payment history and grow your credit score, a secured credit card. The next thing would be to, I would say, apply for a low tier credit card, like something like the Discover It credit card. Once you get approved for that, you're on your way to building good credit. What I would do next is I would utilize that card every single day or every month, right? I would pay groceries, I would pay a bill here and there, maybe a phone bill, and I would, most importantly, I would pay it off on time every time. A good way to avoid missing a payment is just using what's called auto pay that a lot of big credit card companies offer. It's where they automatically deduct the amount that you owe on the credit card every month from your bank account. Right, super easy to set up, and that's exactly what I would do. After about 6 months, right, 6 months of utilizing that credit card, paying it off, utilizing it, paying it off, utilizing it, you can ask for what's called a balance increase. So what is a balance increase? It's exactly what it sounds like. If you have a $3,000 credit limit, you're going to ask for an increase, right? It might be $6,000 or it might be $12,000. Either way, a balance increase is tremendously powerful when it comes to increasing your overall buying power, number one, right? But also increasing your trustworthiness in the eyes of a lender, right? Because it shows that you can make payments on time and that if you're extended lines of credit, that you can be trusted with it. After that, I would go on a credit card application spree. What does that mean? Essentially, I would check what my credit score is, and you need to make sure you're checking it from a worthy site. So number one, I would either use My FICO or Identity IQ, link in bio. Those two credit monitoring services is what I would use to check my score. Once you figured out that you have a 720 plus credit score, right, no negative items, then I would probably apply for 5 to 8 credit cards in one go. And you're probably saying, well, 5 to 8 credit cards in one go. Well, I don't need 5 to 8 credit cards, right? It doesn't matter. The more credit cards you have, the more powerful and impactful it's going to be on your credit score, right? Meaning, as long as you keep the utilization below 10%, you don't even have to use the credit cards once you get approved for them, right? Maybe use them once a year or twice a year or once every 6 months, whatever, right? It's just the fact that you are able to have, let's say you have $50,000 spread out throughout 4, 5, 6 credit cards, right? How powerful is that in the ability that you have, or in the circumstance that you have a major event where you need to where you need to pay for something, right? Or not even that, where you want to start a business and you need working capital. Some of these credit cards offer 0% interest for over a year. That means you can max that card out and basically you have a whole year to pay it off for your business to start turning money before you ultimately have to suffer some consequences. So obviously be careful with that, but there's so many things you can do with credit cards if you leverage them correctly. Like I said, I would start off small, maintain and take care of the 1 or 2 credit cards I have. Then I would go big and I would apply for different credit cards, business and personal, grow my portfolio of credit cards. That will grow my age history. It'll grow the number of primary accounts I have on my report. And lastly, it'll grow the lines of credit that I have in available credit, right? This all looks good and enticing in the eyes of a lender. So when you go and you apply for a mortgage or an auto loan or a personal loan or another credit card, right, they're gonna see, hey man, this guy's got history, got good payment history, he always pays on time, doesn't have any negative items, he's already got 50, 60 grand in available credit. Let's go ahead and give him some more because he can take on the responsibility. That's the important part. So if you took any value from this video, please be sure to like and subscribe. As always, I'm Gilberto from Credit Guys. Until next time.